who's writing in from Pune, and he's asking about the sugar stocks. So a couple of sugar stocks which he's already bought. Kunal, this one's for you. Balrampur Chini, he's bought 400 shares at levels of 445. Dwarikesh, he's got 750 shares at levels of 121. He's asking, should he hold, add, or sell and invest in something else, maybe another sugar name?
You can hold on to these two names specifically. So I think both these stocks are one of the best performing names as such from the sugar pack. More importantly, I think Balrampur Chini I think is something which has been more solid and more robust in the last 3 to 4 years specifically, and I think it's been one of the first stocks from the sugar pack which had actually started to show signs of a turnaround. So I think I would probably advise to stay put, not suggesting to average or add at current levels because of the slew of events lined up. But then I think if the markets or the volatility in the market subside, say in the second half of this week or by the end of this week, then I think it would probably make sense to try and chip into these names. So as of now, hold, but probably if the market volatility stabilizes, then you can look to average.
All right, this one is coming in from Sagar and he wants a technical view on Hdfc Limited, and this one is for you as well, Kunal. He's saying he shorted it around 2300 levels. So he's saying that should he book profits from here or 2000 can be achieved on Hdfc Limited?
A very near-term view, looking at the kind of chart setup, I would probably advise to have a trailing stop-loss mechanism. That's the best way to try and deal with such kind of large cap names. In fact, Friday's open could actually be a good trailing stop-loss for HDFC Limited. That was I think around 2,225 to 30 for the stock price. So if you want to have a deeper kind of a trailing stop-loss, that could be a good level where you can try and have a trailing stop-loss. If not, then I would suggest that you can look to book out maybe 25%, 30% of your profits over here, and then trail stop losses, which could be at I think around 2150, 2175 kind of levels for HDFC Limited.
In the current context, any bit of uncertainty is not really reacted to very well. And this is the case, I think, Sharmila, with Rbl Bank. We've seen a change at the helm, the announcement that was made. You have a new Chief Executive Officer and Managing Director after Vishwaveer Ahuja stepped down. You have R. Subramanya Kumar, who has been appointed for a period of 3 years. And this is an individual that has worked at banks like IOB and institutions like DHFL. The question is from Subramanyam, who's writing in from Chennai, and he's holding Rbl Bank at levels of 180, which is basically double what the price currently is. From the fundamental perspective, would you hold on to this bank or would you exit at this time and book losses?
Well, in a way he's fortunate because there would be people who bought RBL at even higher levels. So I think, yes, I think the stock has corrected even from the levels that he bought at. But I think he can continue to hold and let's give the new person a chance to settle in and take things forward. So I think for the next watch results for the next couple of quarters, but for now it's a hold.
This one is coming in from Natarajan Ramesh, and at current market price, he wants to know whether Kpit is a good buy. He's looking for a horizon of about 2 years. Sharmila, Kpit, do you think right now good time to buy?
I think there is just one concern that what we initially had was a phase where mid-cap IT was sort of a preferred play and they were getting very fancy valuations. So I think that valuation check has now happened and I don't know whether they will go back to the kind of fancy levels that they were at. Having said that, I think that IT as a business I like and the fact that we have rupee going through what it is at this point in time. I mean, okay, for now we are sort of also hit by inflation concerns and recession concerns in the US. But that said, I think rupee being what it is, I think it's good for export-facing businesses. So I think with a 2-year horizon, you're fine.
This next one is coming in from Krishnan. He's writing in from Goa, and this one's also for you, Sharmila. He's asking about Biocon. Would you suggest a fresh entry into this stock with a perspective of at least 1 year?
Yes, I think you can enter if you have like a 1-year horizon in mind. I think this pharma as a play I like, and within the pharma space, I think Biocon is a reasonable name. Perhaps my top pick at this point could be Sun Pharma, especially if stocks correct from here. But if Biocon is the stock that you wish to buy and you have a 1-year horizon, I think you can go ahead.
Okay, this one is coming in from Vivek, and he's saying that he's holding HDFC Life at an average price of 611 rupees per share. He wants to know whether he should continue to hold or book loss. What's your take on this one, Kunal?
I would suggest to hold on, at least as of now. So, till Friday, the stock was getting into a consolidation. Insurance stocks, especially these private insurers, were the ones which were doing exceptionally well for themselves. In the last, I think 1 month, HDFC Life had formed a low, I think closer to 525, and from there the stock had risen to almost, I think 610, 615 kind of level. So almost like a 18-20% jump in the stock price in the last 1 month. So the chart structure seems to have improved for HDFC Life. It's just that today is probably one of those days where a lot of the stocks and sectors are getting a beating. So probably even HDFC Life is getting into a selling kind of a mode on an intraday basis. But I believe once the market resumes into any kind of a stability, HDFC Life should come back above 600, 610 level, which should be a buy price.
Kunal, I'm coming back to you on this next one. IDFC First Bank is the name of the counter. We've got S. Kannan, who's writing in from Coimbatore, and he's asking about the 3-month price target. I do not know whether he's entered. I'm assuming that he has not.
Well, I would suggest to, in fact, my targets on the IDFC First Bank would be on the downside significantly. So, Alex, I think if I'm not wrong, this is the 6th straight month where the stock could probably be, showing negative returns. It's already at a multi-year low for itself. I think broken below the entire 2021, kind of support for IDFC First Bank. So it's a chart structure which has weakened significantly. And even in the last 6 months, the last 12 months, the stock has gone through a sharp correction. So over the next 2 to 3 months, I would expect further downside for IDFC First Bank. And I think that's largely the view for the stock.
This one is coming from Khader SK, and he wants to know why Aptus Value Housing Finance is actually weak in today's trading session. And he wants to know otherwise also on fundamentally, how is this particular counter looking like? Sharmila, do you track Aptus Value Housing Finance by any chance? And what's your view on this one?
I'm afraid I don't track it.
All right, I think it's a fairly recently listed counter. So Kunal, I'm guessing you won't have a view either on it, right?
Yeah, I don't have a view, but then the charts for Aptus, Aptus Limited, I think at 246, approximately where the stock is trading, is also very weak. Now, in the last 2 months, 3 months, of course, the data is very limited, but even the last 2 months from 375, the stock has consistently fallen towards now to sub 240, 250 levels for itself. So it's a weak chart structure. Because of lack of data, I won't be able to, suggest on the longer term time frame, but then on the short term charts, it continues to look sluggish.
Okay, Kunal, I'm coming back to you, SAIL, and we've got a viewer, Jinto, who's looking at the intraday target for this counter. He's looking to exit his position. I'm not able to tell what exactly that is. Would you be able to give us a little bit of advice as to how to treat this intraday?
So I think on an intraday basis, you may expect SAIL to come back to say 71.8, 72 levels, which could also coincide with a critical moving average for the sale on the spot levels. But then I think the view has to be more broad to medium term, because we are at a point where the dollar index is getting into a rally or a breakout kind of a mode that could have a direct impact on many of these commodity stocks, and that could probably result into a decent bounce as well. So the news flow has been negative, price actions have been negative over the last 1.5 to 2 months for the metal stocks or the commodity names. But I believe that probably the tide seems to be turning or returning back into favor for these names. So intraday wise, 71.8, 72 could be a level where you can look to watch out for.
Okay, a lot of short-term queries that I'm getting actually. Let me try and take this one to you, Sharmila. This one is coming in from Amy, and she has... let me just take this. She wants a view on Alchem Labs. She's already purchased some shares at around 2,900 rupees per share. She wants to know how does the prospect look for Alchem Labs going ahead?
I think you can continue to hold a fairly decent stock. Valuations seem a little high, but I think even the chemical space is sort of going through this rejig in terms of valuation. But I think you can continue to hold the stock.
Cement space, a lot happening, Sharmila, and this is a question coming in from Vivek. He's holding Ultratech Cement at levels of 5485, and he's wondering whether to book out of this and look at a company like ACC instead from the perspective of the next 2 to 4 years.
No, I think you can continue to be with Ultratech, and overall, I really think that post monsoon we may see a better sort of better times for cement as a sector because you will see pickup in construction and infrastructure sort of activity. So I think just stay put in Ultratech.
All right. I have a couple of questions on Nifty. We did speak about Nifty at length at the start of the show, but nevertheless, Kunal, just for the benefit of our viewers, one, I have a question coming in from Mr. Bhandari. Wants to know if Nifty is forming a lower highs and lower lows pattern on daily charts. And the other one is coming in from Rancho Gupta, who's asking if Nifty can reach the levels of 14,500 to 14,800 levels. Both of them are tricky, isn't it?
I think in the first part of the question where the Nifty is forming a lower highs and lower lows. So yes, I would probably say partially right. The Nifty is forming a lower high kind of a pattern, but it's not forming a lower low. In fact, it's forming a very similar low at 15,700, 750 mark. So you look at the last 3-4 months as well. We've managed to retest 15,700 mark. I think some 7 or 8 times in the last span of 3 or 4 months on the index, which makes the support very, very strong and something to watch out for over the near term. The other way to look at it is that whether the Nifty would fall significantly below. Of course, if a major support is tested again and again, and if the support yields or if the support gets breached, then you expect a further sharper sell-off to happen on the indices. So I think it's rather than trying to be more preemptive or anticipatory about this, it's always prudent to wait for the levels to be broken down, because now we are so close to that 15,700 mark that I think waiting for another 100 points or 120 points actually could be a better trade. So don't anticipate on the downside, but let the supports be broken. That's where I believe a better or a fresh trend could emerge on the downside for the indices.
All right, we've got a few questions on the IT frontline companies, so I'm going to club quite a few of them. In fact, Suhas is asking about buying HCL Tech right now. You have Sneha Surendran, who has bought Infosys at levels of 600 in 2020. She's asking whether to hold or add. And we've got Ananya, who's asking about Infosys and TCS for the next 1 year or so. So I'm going to take this to you, Sharmila, on the fundamentals. A lot's been said about these frontline IT companies. Attrition continues to be a worry. The global context is also something to bear in mind in terms of order wins and the pipeline going forward, whether that will be sustainable. And the other question, of course, has to do with the depreciation of the rupee, which will definitely shore up their bottom lines. So how would you play this? Would you enter into these counters right now?
Well, honestly, it's a sector I like, but as I said earlier, perhaps to buy, you need to wait to at least allow this event to play out and see what kind of an action Fed takes and how the market reacts to that. I mean, already people are talking of a 75 bits sort of a rate hike. So does the Fed do that? What do they really say about the economic situation, etc.? I mean, what we need to keep in mind is that while US might be a large geography for IT companies to be getting their orders from, it's not the only geography. In that sense, orders are pretty much from all over the world. So yes, I think if you have very large-scale concerns coming from the US in terms of recession and stagflation, I think is another word that is being used, then how does that affect orders going forward? So that could be a concern. But at the same time, we do have a rupee which is weakening, which will mean better things for export-facing companies. So somewhere I think you have to balance it out. Talking of the stocks that were specifically mentioned, I do like an HCL Tech. I think with Infosys, my only concern was post their numbers, last quarter numbers, the kind of attrition rates that you saw, those were slightly alarming. So then in that sense, I think TCS delivered like a really strong quarter. So I think perhaps my order would be TCS, HCL Tech, and Infosys to buy and hold in this current scenario. But to buy, I think, let's give it a little bit of time and then start buying. Don't be in a hurry, but it's a sector I like. We may need to do a sort of a valuation, maybe the valuations that we were giving them 2 years back or 1.5 years back, we might have to scale those down a little. But this will be a sector and these will be companies that will be making money.
That's a view coming in on the frontline IT companies as well as the IT index on the whole. But on that note, we slip into a break on this edition of Buy Now, Sell Now. But when we come back, we will be back with your queries as well. So don't go anywhere. Viewers, stay tuned. So do the experts. Stay on. We'll be back soon.
Check messages.
You have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout the last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout the last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
Right, you're watching Buy Now Sell Now on ET Now, and let's continue with our queries then. And this one is from Ajay, and he wants to know if Godrej properties can be bought at current market price with a month's view. He's saying that it is recovering from 200-week moving average, which was its last low. So what should he do? Should he look to invest in Godrej properties at this juncture, Kunal?
I would suggest to wait out, because this is not the best time to try and chip into a high beta sector, and I think purely in that regards, I would suggest an avoid. Possibly if the stock corrects and say comes back towards 1050 or 1100 mark, which should be almost 10% lower from current levels, that's I think the better level to try and chip into the stock.
This is an interesting question. It's on State Bank of India, and Sharmila, I'm coming to you on this one. I'm going to try and say this name. It's difficult, but I will still try. Sri Mannarayana from Vishakhapatnam is writing in, and he's saying that he was an SBI manager. He has, under the employee quota, got shares of SBI, about 300 shares, and he's been holding for the last 10 years. He's asking whether he can hold it, should he sell it, should I add more? That's the question, and it's been looked at as a sleeping giant. A lot has changed over the last couple of years, Sharmila, in terms of their mortgage book, for example, the way that it has grown. Would you say that it's a good time to add more of State Bank of India?
Well, first of all, I think he needs to hold what he has for sure, unless he is in any money requirement, because I'm sure over the last 10 years it's given him a fairly decent return. Coming to whether you should add now, I think again there you need to wait, because financials do seem to be going through some pain at this point in time. So you need to let that play out in SBI as well. And I think that perhaps we could see lower prices from where we are at this point, given how things are progressing. Numbers for State Bank last quarter, in fact, they did a great job, and they are the country's largest PSU bank and largest banks for that matter. So I think you definitely need to stay invested. But when it comes to adding, as I said, just hold off for a little bit to add further, but hold the stock that you already own.
Okay, Samir Jana wants to know which is the FMCG stock that is safest for investment in current scenario. He's directed this question to Kunal, but Sharmila, I'll take it to you. FMCG sector, which one do you think is the safest bet currently?
Probably HUL. I do like Dabur too, but I think in terms of safety, it would either be HUL or Nestle.
Coming to you, Kunal, Wipro, we've already discussed frontline IT companies, and maybe we can stretch it to asking you as well how you see these frontline companies on the charts. We've got a question coming in from Pranali. She's writing in from Mumbai, and she's asking specifically about Wipro, but maybe you can give us a view on the other frontline companies as well.
I'll start off with Wipro and then probably spread it up across to the frontline companies. Wipro on the charts, frankly, to me at the current levels of 450 odd, looks very attractive, because the indicators are now starting to show signs of reversals for Wipro. Indicators are oversold. The stock is also forming a bullish RSI divergence. The stock is trying to support or get support at this 450 odd mark, which has been the previous support as well in terms of price levels. So many data points are now indicated that probably there could be a temporary relief rally into these Wipro specifically, and spreading it across to the large cap IT space. I think many of these IT stocks, the likes of Infosys, TCS, they have come back towards a very attractive price point for themselves. So my sense is that these stocks may not fall as much as what they have over the last 6-7 months. So there could be an added degree of cushion over here, and probably the risk reward to enter these stocks at current levels, at least in terms of phases, is also very attractive.
Right, Tarun, I hope that answers your question as well on Infosys. Moving on, Soumitra is saying he has a query on Fine Organics. He's saying that he sold Fine Organics at the levels of around 5,900 rupees per share. He wants to know whether he can look to re-enter this particular counter right now, or should he wait for some more lower levels. How is this one looking on the charts? Kunal, Fine Organics, we've seen a sharp surge in this counter after its earnings. But do you think that makes sense to re-enter now or at a lower level?
You can look to start re-entering because you've sold at the at the classical point in terms of the stock peak, at least on the near-term charts. I think at 1,000-1,200 points lower from your previous exit, it makes a good case to try and chip into the stock at current levels. But the only catch towards the stock in terms of finding the better level is that this stock has a tendency of coming back towards its 50-day moving average. Now at current levels, the stock is at 4775 and the 50 DMA is at 4465, which means there is a disparity of almost 300 points to the stock price. Now, if the stock takes maybe another week or 10 days to settle out, then the averages will shift higher. So you can start nibbling at current levels and possibly over the next 1 week or you can have a relook. If the stock corrects, comes back towards 4,500, that's what I think you should look to average it out further.
All right. A question for you, Sharmila. This one's on Tata Steel. And Srinath wants to know whether you would buy this counter for the dividend play.
I would buy the counter, but probably not for the dividend play. Overall, I think metals is an attractive sector for me. And going forward, as China opens up, we're already seeing metals sort of do better. So I would buy it, but not for really dividends.
Okay, this one is coming in from Chintan Joshi, and he wants a view on Sheela Foams for the medium term. How is this one looking to you, Sharmila? Sheela Foams?
I was just actually distracted by the dividend yield of Tata Steel, and that seems to be fairly decent in fact. So I think that's another thing in its favor. Where Sheela Foam is concerned, not a very positive view. I think you should see the stock correct a little bit from current levels. So hold if you have the stock, but I wouldn't recommend a fresh buy.
Interesting. Ordinarily we take stock-related queries on this, but I'm going to stretch it, Kunal, to a commodity. Precious metals is obviously something that's going to be in focus in the near term. That happens when risk assets globally are volatile. Do you have a view on gold by any chance? We've got a question coming from Vinod, and he's asking whether these levels are good to enter at.
Yes, I would probably say that gold is starting to show early signs of a rally. Now I understand that gold and the dynamics of gold with respect to inflation and all of that, it's already delayed. The rally which has been pending since I think the last 6-7 months for gold, that has not happened into this asset class. But right now we are starting to see signs that gold as an asset class is starting to show signs of turnaround. Now whether it's in the rupee terms where gold has found a good support at the 50,000 mark, or whether we go back into the dollar terms where gold seems to be finding good support at that 1800 or 1790 dollar per ounce. So I think in that aspect as well, gold seems to be finding some good support point, and it's starting to move up higher. The only concern is that whether this is just a trend which is too late, or whether it's a trend which has started too late, but it could be more ferocious. That only time can tell. But yes, in terms of the short-term charts, there are signs that gold is starting to bottom out.
From Vivek, and he's saying that he has 250 shares of Aditya Birla Sun Life AMC at 715 rupees per share. He wants to know whether he should exit or stay put. He is seeing a loss of about 42% on his holding. What's your take, Sharmila?
If he's sort of longer term in his view, maybe he can continue to hold. But I think in the near term, the stock will correct from current levels. So if his view is a year and a half, then I think he can continue to hold.
Sharmila as well as Kunal, it's time to hit the rapid fire segment. You know the drill, so I'm going to start right away. The first question is coming from Madhu. This one's for you, Kunal. Zydus Life is the name of the counter. She's holding at levels of 363, and she's asking whether to hold on to this or should she sell.
Well, I would suggest to continue to hold on, possibly keep a trading stop loss at 330.
Okay, this one is from Jaya Krishnan, has Ultratech Cement purchased at 6,417 rupees per share. Wants to know over the medium term what should do with the counter, Sharmila?
I think continue to hold.
Okay, HDFC and Axis or private banks, and he's asking about ICICI as well. Oh, sorry, this is Pratiksha. Pratiksha is asking whether you can enter at this current juncture, Kunal.
I would suggest to have a three-step buying. You can do the first step of buying right now, but once the trend even plays out, is where I think you should start entering.
All right, this one is from Gauri. Wants to know whether Bajaj Finance or ICICI Bank, which of these two should she look to invest over the next 1 year? It's a fresh investment query. What's your take, Sharmila?
I'd go with ICICI Bank.
Chemcon is the name of the counter. Chemcon specialty. We've got Nelson from Kochi, who's holding at levels of 290. Sharmila, this one's for you on the fundamentals. Would you hold on to this? If not, can you suggest an alternative?
I think we can continue to hold on Chemcon.
Again, a question on Bajaj Finance. Vishal wants to know what should be the levels to average or at the counter considering the current downtrend. He's always saying that his average buy price is 6,300 rupees per share. He is a long-term investor. So, Kunal, what's your take? Bajaj Finance to add right now or some more downtrend?
It was one of my sell calls in the morning. I would suggest that wait out, play a bit of Bajaj Finance. I think this should correct more than 10%.
Okay, we've got a question on, okay, Sudha is asking, should I book 30% profit by selling Raymond and re-enter at a later point? Kunal, this one's for you. She's asking whether to do this right now. Should she enter at a later point?
See, I think yes, you can book out maybe majority of the profits per year, and then probably once it down and Raymond at 750 or not, that would be on the.
Okay.
I think we face a bit of
a technical issue. Yeah,
technical issue with Kunal's feed out there. But on that note, we are totally out of time on the query segment. So thank you so much, Kunal, as well as Sharmila, for joining us on the show and resolving all of our viewer queries, as well as giving us a take on markets. But viewers, yes, so we've come to the end of the query segment today, but we will be back tomorrow at 11 a.m. So do write into us and give us all of your queries. But for now, we are slipping into a break on this edition of Buy Now, Sell Now. Stay tuned, more on the other side. Don't go anywhere.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate